Hi there, you're watching Your Trades on ET now with me, Snehisha, and with me as always is Priyanka. And Priyanka, well, not much to complain about in today's trading session because it did seem like we were on the downtrend in the initial half, but we've managed to recoup some of those losses, rather most of those losses, because Nifty has closed sub the 2300-700 mark for sure, but we have managed to recover quite a lot of those losses from the day's lowest point. We've closed roughly 190-200 points higher from the day's lowest point, but nonetheless, it's a red close for the Nifty yet again. Let's pull up a Sensex because that's been in tandem with the Nifty, a very flattish sort of a move coming in towards the end of the trading session for the Sensex as well. However, what did not do well on the recovery front was the broader markets, because Nifty mid-cap and Nifty small-cap, very steep cuts being seen. Nifty mid-cap was lower by 1% and Nifty small-cap taking it on the chin and underperforming the rest of the market. A 1.7% cut coming in on the small-cap index as well. So that's what the market breadth was looking like today. India Wix, however, continued to fall, a 1.3% cut on that front. So no complaints over there. We're below the 14.5 mark for now. Let's see if we're able to sustain around these levels. Sectorally, what did well today was the entire IT space. Of course, you had TCS in focus on the back of its earnings tomorrow. We kickstart the Q3 FY25 earnings season tomorrow, and the first Nifty company to do so tomorrow will be TCS. So the Nifty IT index was held up by LTI Mindtree, TCS, Wipro, HCL Tech. These stocks have done well. FMCG too has closed in the green. Other than these, barring these two sectors, you have the entire sectoral indices. That part of the market is closed in the red, led by Nifty Pharma. The cuts have been led by Nifty Pharma, followed by PSU banks, metal, auto, realty, energy, in that order from most to least. So that's what the market has shaped up to be like. A couple of highlighters in today's trade. Reliance was in focus on the back of two notes coming in, two brokerage notes, and that's held up the index very well and gave some support to the Nifty index. You have Jefferies on Reliance have maintained a buy. Bernstein has maintained an outperform with a target price of 15-20 rupees per share. So Reliance was looking good, HDFC Bank looking good, ITC a couple of notes coming in. So entirely today the focus, you could say, was on stocks on the back of brokerage action, because cements, autos, a lot of these sectors were in focus on the back of brokerage action, Priyanka.
Absolutely, Snehi. But then one very key observation is that was the sell-off majorly in broader market, because if you look at the advanced decline ratio, large cap is what actually held the indices. Of course, Reliance, the biggest heavyweight, was one big contributor. But if you look at the advanced decline ratio, for small cap, it was 20 in green and 80 in red. For mid cap, it was 30 in green and 70 in red. But at the same time, for large cap, it was close to 50-50, 45 to 55. So the sell-off was majorly, it was a broad-based selling what we saw. And of course, heavyweights did held up to the indices. That's what we see, that our advanced decline ratio coming in a 50-50 ratio. But major cuts coming in the broader market for sure. Sectoral losers, and even if you talk about gainers, there seem to be similar kind of moves coming in on the Nifty top 5 counters, at least in terms of ONGC, we can say that. ONGC this is the third straight day of gains for ONGC on the back-to-back brokerage notes, and of course on the Brent move also. But then OMCs were also gaining, even crude derivatives like Asian Paints were gaining. But wherever earning is a very big trigger right now, wherever the earning visibility market and traders, participants are able to view, there the confidence lies. But yes, a couple of news which did impacted the stocks. One was UBL. That one slumped as the company stopped the supply to TSBCL. Purely on the back of the unpaid dues, this stock did get impacted. Ola Electric, of course, the way Karnataka High Court that denied after the time and again, many complaints. But then, yes, this counter did recoup losses after the SEBI warning and the kind of action, regulatory action we've seen. There are sources which say that agree to see higher budget outlay. We will have that story up for you later in the show. But then Paytm, this one cracked just because on this news as there was no UPI market share gain in the month of December. 9% is a crack, and it was a massive cut coming in on Paytm. So this was a quick wrap on the market move today, but let's understand that how are the technicals from the derivative space and even from the cash market shaping up at this point in time. Amar Singh is joining us from Angel One. Amar, will that be okay to say that the selling was majorly in mid cap and small cap? They were hammered the most. Indices have not seen that much of loss today. In fact, whatever cut came in, that was recovered also. What is your reading on the indices, Nifty, Bank Nifty both?
Yeah, thank you for having me on the show. So we definitely, what we saw today was that the benchmark indices are strongly supported anywhere around the 23,500 odd levels. And that we saw today as well. And as you rightly said, that the overall the breadth of the market still is quite weak, and that can be reflected in the advanced decline ratio, as you rightly put it. Having said that, what we are seeing is that in some of the heavyweights, including the likes of Reliance, there is a pullback. But the benchmark indices, if I'm looking at it from a technical perspective, they continue to witness a lot of selling pressure at higher levels. Because first talking about Nifty, if I look at Nifty, so somewhere or the other, Nifty is unable to breach and sustain above the 24,200, 24,300 zone, because that's acting as a very strong resistance zone. Because last week, Nifty had made a high of 24,226. Then it has corrected recently this week itself, so 23,500 levels also. So we are seeing that there is selling pressure at higher levels, and that's what we are definitely going to witness. That's not going to change in the near term. We would witness a lot of consolidation, but as long as 23,200, 300 zone support zone is not taken out, I wouldn't be unduly worried. But yes, if 23,200 is taken out, then we could witness some sharp sell-off. And there would have to be some reasons. One data point coming up on Friday, the US non-farm payrolls, that's going to be very important because that could definitely set a tone for the global markets as well as impacting our markets as well. As far as FIIs are concerned, they've been on the sell side. So that also, we are not seeing any changes. The other interesting thing is that crude oil prices have inched up. So they are still within manageable levels, but a 4% increase in crude oil prices in the month of January itself, both on the Brent and the WTI, clearly shows that there could be some concern there as well. So these are some factors which could drive the markets. But all in all, I would say IT looks positive because it's definitely benefiting out of the depreciation of the rupee hitting record levels, so record lows, I would say. So these are some factors which needs to be keep a watch on.
Highlighting that for us so nicely, lots of factors to watch out for when we're trying to gauge which way the market is headed. But amid a market like this, you did say selling pressure continues. You also said that IT looks good on the back of the rupee depreciation that we're seeing. What stocks would you suggest for our viewers? What's looking good? What's looking safe, rather, I should ask right now?
So if we look at what's looking safe, I would say Infosys is definitely one stock one can keep a close watch on, because Infosys has been doing, I would say, reasonably. It has been performing quite well. We are seeing some sort of consolidation there, but on any pullback in this stock can be looked at from a medium-term to long-term perspective. And if I look at some of the other IT names, so if I look at some of the other IT names, so we are seeing a lot of strength there as well. So one stock one can keep a close watch on is L&T Technology, because that has corrected from almost 6,000. Currently, it's around 4,900 levels. So it's around very crucial support zone. So there could be a pullback here as well. And the other IT stock is, I would say, Persistent. Persistent, we've seen this stock really, it's been a one-sided way for this stock. Now it's slightly in the corrective mode, but any correction in this stock is a buying opportunity. So these are a couple of stocks one can definitely keep a close watch on. And yes, most important, even TCS looks good at the current levels. 4,000, at least on 4,100 levels towards 4,000 levels, if it's able to sustain and maintain. So we could expect some pullback. But one needs to remember that most of the IT stocks are going to witness some sort of consolidation going forward, because we are going to have the new US president also come in. So what steps and actions he takes, that could have some impact. But overall, IT space should do well.
IT space should do well, and that's what is being reflected in the price movement also. This is ahead of the numbers. Thanks very much for joining in and giving your insights on the stock as well as in the markets. Moving on, let's get your word from the wise. Rahul Chadha did join us and he spoke about the premium consumption. Rahul Chadha, who's the founder and CIO for Shikara Investment Management, he believes that travel and hotel stocks are poised to perform well. But what are his views on the rural consumption space? Let's listen.
Premium kind of consumption categories like travel will continue to do well. Yeah. So we've seen that. You look at around us, in your friends, family circles, etc. Everybody wants to travel out, and there is a wealth effect, and there's a propensity to do that. So again, hotels and things like Make My Trip, etc., the big beneficiaries of that. We've seen a bit of a breather in premium consumption, but some categories like jewelry is done well. Rural economy plays, I think that's something one's been waiting. That look, the pressure which came from inflation post-COVID has eased off, and incomes have improved, economies have improved. So the hope is that some of these two-wheelers or consumer staples should do well in the coming quarters.
The word from Dubai is coming in from Rahul Chadda today, but on that note, time to slip into a short break on this edition of Your Trades, and we'll be right back to tell you what the derivative setup looked like for the day.
You're watching Your Trades on ET now. This is Priyanka along with me, Snehi. Let's get you an action from the FNO space now. How did the activity pan out today for the Jan expiry for this week? That is tomorrow. Today is the Bank Nifty, but tomorrow is Nifty. Of course, the trend was flat on Nifty. We did saw both sorts of move. Actually, it was a seesaw move on the indices today for both the Nifty and Bank Nifty. Both traded in a very broad range. The first half was towards the downside, and then later half was towards the recovery side. The active calls which went into writing were 23,800, 23,900. These seems to be the immediate resistance now. VIX was it's a little below 15, 14.5 was the precise level, 1.5% down near about. Active puts wherein we could find a support was at 23,500 and 23,600. So seems like maybe the action towards the downside could be little limited, but then the upper seems also capped at this moment, the kind of put and call action we've seen for today.
Absolutely, 23,900, the next important level to watch out for on the resistance front when it comes to the Nifty. But let's move on and talk about the big story of the day. And well, the stock in focus today absolutely throughout was Paytm. Let's take a look at Paytm's analyst meet. Now, MK has released a note on the key takeaways of the meet. The management expects to regain 100 million monthly transacting users, that's MTU, in the next 12 to 18 months. Before we take it across to Varun for that, it's also important to understand that Paytm was also in focus today on the back of some NPCI data coming in, wherein it has showed that Paytm has not gained market share when it comes to UPI at all in the month of December. So that was another reason why the stock is cracking lower in trade. But well, yes, their analyst meet was also one of the reasons why the stock was in focus. And Varun is joining us with all of those highlights. Varun, take it away.
Definitely. So MK has actually hosted the management of Paytm, and they say that the company is actually gradually emerging from the regulatory curves that were imposed on the company last year. Also, the company is witnessing positive results from the NPCI approval, and the company says that in due course they will also receive the payment aggregator license from RBI, and after which the company should actually they should open the onboarding of new online merchants. The company actually expects to regain its earlier high of 100 million MTU latest by around 12 to 18 months. Now, let me tell you that in Q2, the average consumer MTU has shown a decline, and the company expects this reversal to happen soon because the NPCI approval they have got to onboard the new UPI users. Also, the new merchant onboarding and also the GMV growth, they are expecting it to pick up in the third quarter, mainly because of festival season. The company says that in the wealth management business there is a temporary slowdown which is expected, and this is because of the new rules, new FNO rules which have come out by SEBI. So that is impacting the overall wealth management business of Paytm. Company also expects to add around 2 to 3 lending partners under the FLDG agreement. So if you look overall commentary, it is still okay, wherein MK has hosted the management of Paytm. They are expecting some recovery in coming quarters.
Okay, so of course this was the MK analyst meet where the conclude came, but then major disappointment which traders reacted to was that there was no new addition in the month of December, and there was a similar negative set of news which came in at the start of the month only, and that's what maybe this came as a double whammy for the stock. Moving on, let's talk about the Ola Electric now. Ola Electric shares were under pressure today after the company received an administrative warning from SEBI for violating the disclosure norms. Ankur joins in with more details on that. Ankur.
Yes, market regulator SEBI has issued administrative warning to Ola Electric regarding the disclosure norms, citing violations of regulations disclosure regulations. Now, this has happened because Bhavish Agarwal had made the company announcement on X, which was formerly called at Twitter, before actually disclosing to the exchanges. The warning is related to Ola Electric's announcement of a planned fourfold expansion of the company-owned store network by December 20, and the announcement actually happened on exchanges at 1:30 p.m. But before that, the announcement was actually made on X, which happened on December 2 around 10 a.m. So all in all, the allegation is that why the announcement was made on micro blogging site before it actually happened on exchanges, and therefore a warning has been given to the company. The above violations have been viewed very seriously. That is what the letter which has been sent by market regulator to Ola Electric says. However, it does not have any financial implication on the company. Ola Electric has mentioned that this letter has been received on January 7 by them.
Okay, thanks for all of those details, Ankur. Ola Electric, that stock was in focus in the back of that news flow. But let's also take it across to Rabinder, who's standing by with a list of all other stocks that were abuzz on the back of their individual news flows or brokerage notes. Rabinder, take it away.
Well, UBL is in focus, where company has decided to suspend the supply of its beer to Telangana Beverage Corporation Limited with immediate effect, and the rationale behind that is that the TGBCL has not revised the basic price of the company's beer since 2019-20, which result a huge loss for the company in the state, and the significant overdues remaining unpaid by the TGBCL for the past supply of the beer by the company. Moving to next, on note of week Q3 update, Shobha Limited is also in focus, where the company's sales value declined by 29% year-on-year basis, and in terms of volume it declined by 39% year-on-year basis in Q3 FY25. Moving to next, Tata Technology is also in focus, where the Tata Technology has signed a MOU with Telechips to innovate solution for the next gen software defined vehicle. Moving to next, Suven Life Science is also in focus, where company has announced the phase 1 clinical trial for one of its drug, and the first subject has been successfully dosed in the trial, and the drug is used in the treatment of cognitive disorder. Lastly, on back of brokerage note, Dr. Reddy is in focus, where Nuvama has come out with the note on Dr. Reddy, and they have upgraded the stock to buy rating with target price of rupees 1553. They say that the rev limit patent expiry is in 2026, which is a significant risk to company's earning growth, as the drugs contributed almost 40% in the company's EBITDA in FY24. Management has outlined strategies to reduce the impact of rev limit loss, and they say that the new launches in Canada and US are expected to offset revenue and EBITDA loss. They say that the risk reward of the Dr. Reddy looks favorable.
All right, thanks very much, Rabindra, for all those stocks that were buzzing in trade today. With this, it's a wrap on your trades. Thanks so much for watching. Stay tuned to ET Now for more updates.